All right, welcome to the first episode of Talking Shift with Vaughn. This is a good day to have a tipsy Tuesday and offer you guys some tips and information and kind of just talk about a bunch of shift. So let's pull us up a good one. Let's get right into it, talking some shift. All right, so one of the things that I find to be most common and I'm always getting asked about in real estate is how has 2020, this has been a wild ride. I'm talking about, wow, people fighting over toilet paper. It's been ridiculous. But I always get asked about how has this pandemic affected the housing market in 2020 and how will this year's presidential election affect you and your house and its home's value? Well, let's be honest, keep it 100. This presidential election is an unprecedented election year. I don't really care if you talk about housing or cars or shit buying markers for that effort. Everything about this is unusual. None of it is precedented. So typically, when you're talking about markets, whether it's housing or stock market, you can always look back to predict your future. At least a little bit. You get a little bit of a sense of it. You can look back for year over year how stocks have performed in the last 15 years, and you can kind of start to pick your stock. Same thing with housing. Every so often we're going to face some kind of recession or setback, or sometimes we'll have what we're experiencing now, which is really just an uneven mountain climb. Some days houses are selling for 3-4 times over market, and other days houses are sitting for 140 days. Now, we're facing some really stringent things that are about to happen because through this pandemic, one of the ways it's affected the housing market is that a lot of people with their jobs, they got furloughed, and in the midst of furloughs, some of the small business owners, self-employed people, they got paycheck protection programs, they got different types of loans because of a stimulus package put forward by the pandemic, this whole thing, right? So when that happened, that created a little bit of a ripple effect in the real estate market. Because people got that, banks and lenders were offering forbearances. Forbearances are different than deferments. Okay, forbearance is a way that someone or a bank or lender will let you, they'll agree to postpone payments for a certain amount of time. And at the end of that time, they want all of those payments. So an accelerated payment. They want a balloon payment, and then they'll continue on. Now, in the midst of that, you don't face foreclosure for skipping payments because of the forbearance agreement. Now, interest will continue and all that good stuff. So you'll be on the hook after, say, 3 months of forbearance. Now you're on the hook for 3 months of mortgage to be paid all at once. That's how forbearance works. Well, that was introduced, during this pandemic. It's not an uncommon tool that banks will use, but this particular time they used it and a lot of people took advantage of it. Now, when they took advantage of it, most often they took advantage because they were finding themselves facing some kind of financial difficulty. Either one or more household incomes were either decreased or disappeared altogether. So some people found themselves in that situation. Well, if they didn't have any income or enough income to make it through their typical mortgage payment, the possibility of them facing a lump sum debt in 5-figure ranges is probably unlikely. But some people took advantage of it because they had to, and other people took advantage of it because they didn't completely understand it and thought it would be one of those government-based perk programs that'll work to their favor. Well, let's fast forward. Here we are now. In addition to the forbearance stuff, you also had major corporations, companies that employ thousands, tens of thousands of people. They got big portions of stimulus money in order for them to maintain and hold on to their employees. Well, guess what they did? Instead of stretching that stuff out and making it last so that people would have an opportunity to recover from this, no. What they did is they set a deadline of how much money that would cover for their business and also for the most part, keep their shareholders happy. Okay, that date this year for most companies ended up being the end of the third quarter, which means that sometime around September or October. Well, here we are, September, October timeframe, and we have millions on millions of people unemployed. The unemployment rate has skyrocketed. I'm telling you all of this because all of that dictates how the housing market moves. Okay? If you have a bunch of people, a lot of families that have faced a financial hardship, that puts them in a tough situation as a homeowner. Okay? They are not in a position to necessarily just move and sell their house and go get another one, because whether you're renting or leasing or buying a new one, you're going to have to show proof of income. And if you lost your job, where's your proof? Okay? That makes it difficult for someone to make a move in the middle of having a financial hardship or downturn. So less houses get put on the market unless they are forced. What that means to us as a real estate population, it affects so many people when things like this happen, because you have homeowners, which are sellers. They're affected because they want to make a move, but they kind of can't make a move. And because of how low inventory homes are, if they did sell theirs, then it becomes the question of, where do I go now? Now, they're holding their house off the market. The inventory is already low. And now you have a multitude of buyers that have also entered the market because during the course of this pandemic, even a little bit before, interest rates have plummeted. They're the lowest they've ever been in history. I'm talking 2%, 3%. Man, if you see a 4.5, you are really arguing with the lender now because of how good interest rates have been. Well, when that happened, that introduced buyers to the market that had not been able to buy before. So now you have twice the number of buyers and a third the number of sellers. That creates a false appearance of a strong market. Okay, false appearance of a strong market is one that seems like every time you put a house on the market, it sells in days and it sells for tens of thousands over asking price, and you had 9 buyers and 16 offers, and the sellers were able to negotiate their terms however they wanted. That seems like a strong market. That's the outward appearance, but it is not. It's not a strong market. It is only appearing that way because the demand is not actually lower. It's forcibly lower, which means that the economy today has driven people to a position where they cannot afford to make the types of decisions that they would make in a normal economy with normal paychecks and normal conditions. Another thing that this pandemic has done outside of the financial impacts is your social impacts. The way that people and real estate agents, by the way, there's lots of people been affected. Lenders got affected. Agents are affected. Inspectors are affected. Home buyers are affected. Title companies have even changed the way they will close on your property because this pandemic or virus that has spread has everyone kind of operating with a huge amount of safety, which is certainly a prudent choice to do. But it changed everything about the housing market. Don't be fooled by it. Everything that seems like, and the stories you hear and the friends you got, well, if they're not actively in this market operating on the inside of the machine, you probably don't see how many cogs are broken. But from the outside looking in, it looks like a strong market and it's doing great and it's powerful and things are moving just fine. It's really not reality, right? It's really not. And because of so many people that are out of work, I mean, let's use some common sense here, okay? A lot of people out of work that used to be able to afford something can no longer afford that something. What do you think happens? Obviously, it's clear what happens. Things are going to have to be foreclosed or repossessed. You got to give them back or find another way to pay for them. Those are the facts. Now, as difficult as these times are, that's what people need to be thinking about and facing. I know the presidential election has also impacted this whole what you feel and what you think about the market itself. Now, I don't really care who you vote for or choose or don't vote or choose, whatever it is you want to do. The market itself is impacted every election. This one is no different. In fact, this one has more interest in how it's going to affect the housing market than any other. Because the movement of what one candidate says they'll do versus the other candidate also impacts the stock market, in which everything about real estate is driven from the stock market. All the bonds, all the debts, Everything's driven from there. Not to mention materials. You can ask, I was talking to a construction company or builder, and they were talking to me about the increase in builder materials. Some materials have gone up as much as 170%. Can you imagine that? Lumber that used to cost $2.16 for a 2x4 is now almost $4.50. That's insane. But it's happening because of the pandemic. Limited suppliers, limited manufacturers, tariffs on different countries, and we can't necessarily import the way we always have. So things are changing, and there's a big shift. This is good too. Maybe a little too good. But things are changing, things are happening, and it is a shift. Now what you got to do, my advice and possible solution to you, is when shifts happen, when things happen, do your best to take a pragmatic approach to things. Be data driven. Find information before you get worked up and make a decision that you're not prepared for. You know, Sweet Properties, myself, we have good solutions in situations like this. And it wouldn't be a bad idea to pick the brain of a specialist that can help you out if you're facing some kind of financial turmoil, or if you're being led down the wrong path with this whole sell your house today thing, and it's a super strong market. It is a decent market. It's just not what it appears to be, okay? And at some point, like everything, sooner or later, you're going to have to peel the mask off. And when you do, you'll figure out whether or not you still like what you see, or if you'd rather it was something else. In either case, I want you to, if you find that you thought talking shift with Von was interesting, then follow me. I'll be here every Tuesday, talking shift at 7 p.m. I really hope that you stick around and see me. And if you don't, you can follow me on all social medias. Sweet DFW. You can follow me everywhere. Okay? Instagram, YouTube, Twitter. You can find Sweet everywhere you look. Come back next time. Let's talk again Tuesday. Some more shift. It's not always real estate. I talk shift about everything. And sometimes I'll talk shift about everyone. So come back and see. In the meantime, see you later.